Welcome to the channel, traders. Today we're covering ICICI Bank, and that's a bit of a tongue twister, so if I mispronounce the name, let it go. ICICI Bank is one of India's leading private banks, known for strong retail lending growth, improving asset quality, and consistent profitability. Some might argue the current chart setup looks like a bull trap, and we'll cover that shortly. But is this a good entry? Before investing in ICICI, watch this video first. Most retail investors study charts and indicators, and that's a great strategy, but we take a different approach here. We're going to analyze ICICI through the lens of institutional investors by zooming in on where smart money is and who is in control of the supply. See, on Wall Street, smart money calls it feeding the chickens. That's when institutional investors accumulate stock early, then distribute it back to retail investors for profit, leaving you holding the bag. From what I see, institutional investors are accumulating this stock, and hopefully you're not a chicken waiting to be fed. If you are invested in this stock, stay tuned for the entire analysis as we learn more about where it could go next. And if you're still on the fence about investing in it, you might find it may be the bargain you are looking for. It's important to note that this video is for educational purposes and should not be used as financial advice. Bottom finders are not financial advisors, but a group of very smart technologists that know how to model data and perform quantitative analysis. Before we start, we kindly ask you to subscribe and click like. We are a young channel and truly appreciate your support as we analyze popular stocks every day. Also, feel free to tell us what you think of ICICI in the comments below. And with that, let's kick it off. So the bank recently posted record annual profits, maintains low bad loans, and continues expanding its digital banking operations. Investors generally view this stock as stable long-term banking play tied to India's economic and consumer credit growth, though risks include competition, regulatory oversight, and interest rate pressure. Now, the main positives for this stock are its large private bank franchise, strong capital positions, and digital banking strength. The key risks are margin pressures, competition, and exposure to India's credit cycle. So the first step in our analysis is to look at the supply and demand charts on bottomfinders.com. We are looking at the green line, which is the demand metric. It oscillates typically between 40 and 60. And when it looks to dip below 40, it always looks to turn back around and vice versa on the 60. Now, where it sits now is at 37. So there's some pressure in keeping the demand low. And this often occurs when institutional investors are accumulating. They're in essence compressing or pushing down the price, and that causes the demand to decrease where retail investors leave their positions. Now, when we impose the institutional investors, we clearly see how they have been accumulating this stock. They own or control a large pool of the supply and they have it under their control, which means that when they go to sell, they are the ones that have it in possession, and you will most likely be buying from there. Now, imposing the retail investors onto the graph, you will see that retail investors are pretty much just sort of bouncing along the bottom, and they have some, but not as much of the supply. So that gives the bargaining power over to institutional investors, and retail investors are off doing something else in some other stock. Now, looking at the volume balance, which is in essence the net balance of the volume between inflows and outflows. And what you have here is that below the zero line, it all goes to institutional investors, and anything above the zero line is retail investors. And the takeaway from this is that you clearly see that the net balance of the volume is being accumulated by institutional investors. They have it. They're in control of it, and they gave it a really good push over the past few months. I would say starting sometime in mid-February. And we're going to go over to the charts here in just a second to have a look. Now, looking at the daily price action chart, say for the last year or so, I want you to take notice of this W right here. So, or at least soon to form W. You can see that it's sort of now hitting the bottom. This is what we can call a double bottom at the moment. Hopefully it stays a double bottom so that it continues to go up. But I do want you to take a notice at this soon to be formed W. And continuing on with the bottom finders supply and demand charts, this is the supply and demand on the aggregate for the past month. And, we could look at the financial sector as a whole, and we could see that, the demand is still pressed down. The institutional investors are still up here accumulating. But there is a little bit of a turnaround, or so it seems. Like when we look at the bank industry within the financial sector, the bank industry appears to be sort of, turning back up and pointing upwards, whereas the supply is starting to come down. So there's distribution happening in different stocks out there. And I think ICICI is beginning to see some of that action. Now, before we take a look at the technicals, I do want to take a minute to identify who the institutional investors are, who the big players, and who's playing in this space. We head over to Yahoo Finance, we take a look. Now, the percentage breakdown seems a little bit odd here in that, we have institutions upwards of 17.6% owning the shares, and very similar to the float as well. About 0.2% own the insiders own the stock. Now, this is a giant float, and I'll show you what the size of a float in a minute. But when you have that size of a float, these kind of percentages, although small, still amount to large figures. For instance, we have GQG Partners. I think this is a company out in India, but essentially they own $2 billion worth of stock in this company. And you've got some others, including WCM. You got uh, we don't see the typical institutional investors that we like to see in there, including Vanguard, BlackRock, and State Street. But we do see a couple of market makers. Prominently, Morgan Stanley is in there. So they're definitely a market maker in this mix. You also have JP Morgan and Chase. They're playing a market maker game in there. And you do have Bank of America, is also known to be a market maker as well. Just imagine a trading desk of 1,000 people and working the market itself. This is a stock that has billions in its float, and it takes a lot to move it. And sometimes you need the coordination of multiple institutional investors. But it is an Indian company, and it may be that there are investors over there that we don't know about. All in all, it does say there's 821 institutional investors in there. So you're not alone in this space. And again, this is a reputable company. I think this is on the scale of a Bank of America or Wells Fargo here in the States. Now, coming to the summary view on this stock over on Yahoo Finance, I like to take a quick glance at these charts. We're looking at the earnings per share. At some point, it dipped down last year, and it seems to be working back up. Keep in mind, when you're looking for the perfect company that's always making money, that is, um, you know, in perfect alignment with finances and so forth and so on, what you're going to do is you're going to pay premium. And this isn't really necessarily the goal, is to buy up top. Now, if you are buying and you're going to put it away for 10 years, and that's fine, you could do that. But if you are buying and you're just looking to flip this thing on a swing trade, maybe like in a couple of weeks or months, now this is ideal, right? So you're going to see this kind of movement, and you do want to find these opportunities where a stock has been pushed down, but yet it's still a good company. But it's a matter of what the institutions are doing with it, so that you can get in at the ground floor and ride up. In other words, you look at this company and they have upwards of $1 trillion in revenue. I mean, this is the revenue, and their earnings are up there, over 100 billion each quarter. So there's nothing to shake a stick at here. And even though that their stock has been coming down over the past few months, don't look at it as something to shy away from. You need to explore that and see if this actually does pose an opportunity. Look at the analysts; they have given it. I think most have given it 3 buys and one strong buy. Now, remember, this is an Indian company, so I suspect that they have some sort of a rating system here. But for what we have in the States, it seems to be leaning towards a buy. Now, I don't give too much credence to these kind of ratings, but they are there for you to understand what the message is to the general public. Now, let's take a look at the technicals. And I'm not really a technical trader. I purely go off of supply and demand and where the inventory is. But I do want to cover this to give context to the stock itself. It has been trending downwards, and that's okay. I think it's intentionally has been pushed down, and it's been coming down for the past, I would say, about maybe 8 to 10 months. And this is the W that I pointed out in the other graph or chart. And as you can see, it's hitting a support down here. Now, there was a channel that was coming down. It's just 2 points. So I probably would not give this too much in terms of legitimacy on a support level, but this here seems to be a solid support. Another line of demarcation that we should look at is this purple line, and I have where the cursor is. As you can see, this was a support over here that eventually became a resistance. Now that's all right, because what we see here is a potential climb back up to this resistance to try to break through that. Now, we should not lose light of the fact that it's sitting at about $26 now, and that resistance is 29, which gives you some, upwards of a 15% move, or it's $3. So you may be something worth exploring. Now, I don't expect it to stop here. I think it might go a little bit higher, but this line is certainly prominent in these technicals. Now, a quick look at the float. The float is at about 3.5 billion shares. Now, you look at Bank of America, you look at Wells Fargo, they have a similar size float. So it's nothing to shy away from. It's fine. It's just it's a bank and they deal with large amounts of stock. Another number to look at that is of interest is the short float. Now, it is at 0.61%, which means that hardly anybody is shorting it. So, really almost nothing. I think that together from the 3.58 billion, we have 21 million shares shorted. That may be a hedge towards some sort of call options or something along those lines, but and it's very little. Now, this is good and bad. It's good in that you don't have downward pressure, and it's bad that you don't have the stops that would catapult the price into the stratosphere. So this is a stock that will step up, as you see here, in gradual steps. Now, these could be um, quite quick, right? So definitely something to keep in mind. The forward PE is at 13. That gives us an indication of the value. So the price right now is at a value. It's not dirt cheap, but it is at a value. It's not like the 20, 30, 40, PE. So it's something that's definitely worth looking at. So we're looking at the stock charts, 3-year price action, and we could see that it has gone up, and at one point it may have hit around 34, and it's down over at 26. So now you see this W right here, or this W forming. It is moving from off of its bottom, so it's starting to close out. I think the last 3 sessions has been in the positive, but we also see this W right here. We see a sort of a quasi W right here. We also see one right here, and so there may be an indication here of some sorts that a W is forming. And again, the play may not be up to $34. The play here may be up to 29. You could use your judgment on that, but I do think that currently where it sits with this double bottom forming, that this does appear to be forming an opportunity for a bottom and for us to potentially explore it. Now, looking at the MACD, you could kind of see it. It's a little bit hard to see, but if you have a chart that has a MACD, you can go and take a look. It is beginning to turn up, so this could be potentially the MACD going into positive territory with the histograph, and looking at the 9-day moving average crossing over to 26. So something to notice here. And if you do notice on the last item here that I want to talk about is there is an increase in volume. Now, it's almost not noticeable, but there is. And if you take a look, the volume has increased here. Now, this would have to be the institutional accumulation that I mentioned over here. So they are accumulating this stock, and believe you me, when they're accumulating, they're not buying it to put it on the shelf and just wait to one day for the price to come up on its own. They're buying it, and they're going to push the price up, and they're going to sell it at a premium. That's how it works. And that's what they're going to do. So keep an eye on this and see if this is something that fits into your portfolio. And now we're going to actually analyze the news. And this is very important because we have to understand what institutional investors are putting out there in the ether about ICICI. This is their way of getting us to march to the same page. And in some sense, we can call it herding the sheep. ICICI Bank is gaining momentum as investors grow more bullish on India's banking sector. Business Standard reports the stock has now risen for 3 straight sessions, while HDFC Sky says financial stocks helped lead India's market rally on May 25th. So institutional sentiment also remains strong. Yahoo Finance named ICICI Bank one of its best Indian stocks favored by hedge funds, citing its steady growth and strong banking franchise. Analysts at Seeking Alpha upgraded the stock to bullish after strong Q4 results, pointing to healthy loan growth and improving profitability. So they're painting a very good picture about this stock. Meanwhile, TradingView highlighted unusual options activity around the stock, suggesting traders may be positioning for a larger move ahead. Overall, ICICI Bank has increasingly been being viewed as a high-quality long-term banking play tied to India's economic growth. So there may be some whales out there buying a whole lot of options contracts, something to dig deeper into if you want to verify this. So the bottom line is that investor sentiment around ICICI Bank is turning increasingly bullish. The stock is attracting institutional buying. Analysts are upgrading their outlook after strong earnings, and traders are showing elevated option activity that could be signaling expectations for further upside. Overall, ICICI Bank is being viewed as a strong long term banking play tied to India's economic and credit growth. Something worth noting. So, in terms of what Bottom Finders thinks of ICICI Bank, it is a strong candidate for a bottom. We saw in the supply and demand charts, the demand metric is well below the threshold and it's going to turn around. It cannot stay there. Demand just doesn't deplete. They cannot push that down past that 40 line because it will eventually just go away. So then we looked at the institutional holders, they're pocketing this stock. And then we looked at the retail investors who are really looking in the other way. They're not even looking at this stock. Then we looked at the chart itself. We saw that it was forming a double bottom, some form of a W, if you will. And we saw the volume balance. It was leaning very heavily towards institutional investors. On the institutional holders, we had, I think, upwards of 821 institutions that are holding this stock. This is has a very large pool and under 1% short float, so there's really no downward pressure. They have been their earnings have been above par, and they're getting a lot of attention for their performance. They are prone to risk on the margin and interest rates, and above all, competition. Their chart just clearly shows that there is support on those double bottoms as something that is worth looking at, and the news is just like over the top about this stock. So they're like, really giving it a lot of credit and props for what it has done and how institutional investors are absolutely all over it. So it's something worth looking at. If this is will fit into your portfolio, you can take a look at that and see if it's a reasonable buy for you. But definitely something worth looking at. We hope that this video gives you insight on where the smart money is in ICICI Bank. Be sure to leave a comment on where you stand with this stock. Your experience might help others in deciding their next move on the stock. Also, be sure to subscribe and give this video a like. We truly appreciate your support. Until the next video, trade smart and be patient for the right deal to come along. Adios.